Yeah.
Hi, everyone. Dale Pinkert here, and I'm here with Julian Brigden, one of my more favorite guys to talk to. His analysis on macro is elite. I've seen many of his forecasts work out. Sometimes we agree, and we also agree to disagree, and that's why we have great conversations. Welcome, Julian.
Thank you very much, Dale.
So I want to start with the article that you wrote for Barron's Online, and it's about de-dollarization. I have to tell you, Julian, I've never seen so much angst in the general public, which is unusual. You have like cleaning service ladies asking about the dollar, worried about the dollar.
Oh,
I'm
Jesus.
telling you, Julian, a group of
You have some
farmers.
intelligent cleaning ladies, Dale. I can't even find a bloody cleaning person, let alone,
How about farmers? A bunch of agricultural people wanted me to come in and talk about the dollar. Everyone is already freaked out about the dollar, and the decline in earnest really hasn't even begun. Have you ever seen an environment like this where people are worried about the dollar?
I mean, I think you could cut that two ways. I think if you genuinely ask people, and I've been doing quite a lot of chats with, family offices and this sort of thing, and family office forums. I think if you ask everyone, does the current setup in the world pass the smell test? They'd all go, no, right? We look at the equity market up here, we look at the real economy, we look at the government and just how quite dysfunctional it is. And I think people all rightly get nervous. I am not in the camp where I'm sort of so Machiavellian about this, right? I do not genuinely believe that the renminbi, some sort of gold-backed currency, is about to replace the dollar as the reserve currency. I mean, there's just none of the criteria that you really need. I mean, none of these guys run current account deficits. That's a prerequisite for being the reserve currency.
Right.
I mean, maybe you could do something that was backed by metals, but it would be bloody hard. It's very hard. There aren't enough of these things. Your leverage on them would have to be huge to get the currency out there. So I'm a little circumspect about that, and I think it somewhat detracts from the underlying story, and the underlying story is we see big cycles in the dollar, right? I mean, it is a very cyclical beast, right? If you look at you go back to 1972 when Bretton Woods ended, the thing drops 50%, then it dropped 45% post Plaza, then it dropped 38% from 2002 to 2008. So I'm not, who's to say we're just not going to drop 30%, right? And we've done about 8 or 9 so far. Like, that's kind of my thing, and it's more a flow story, Dale, than it is some sort of massive Armageddon crap, right? But no, don't get me wrong, a 30% decline in the dollar has inordinate implications for markets.
Yeah, like it makes the Fed's job tougher because of nominal gains in commodities just based on a lower dollar.
Correct.
So the gist of the article is you believe we're in a bear market in the dollar, but it's not the end of the world. It's happened before, and over the course of 3 years or so, we could lose another 30%. I have a question for you because to me, I think we're near what might be an inflection point, and even bear markets can shake out bears with sharp recoveries. And we took out this low last week, so we're actually
this is dollar index, right?
Yes, it's a dollar index, and if we have a close over 103.60, 101.60, that would be a 2-week reversal. But I could also see one more washout. The big emotional number is going to be par, right? Big round number. Why not go for it, right?
I mean, look, I'm looking at. Here's the thing. I mean, we went back and we looked at some work on the dollar, and typically 80% of the time, the highs and lows of the year are typically created in the first 3 months of the year, 80% of the time. Dale, right?
Okay.
So that kind of gives you, in euro terms, a pretty well-defined range. So on the top side, you've got to get above a close
112.
above. No, it wasn't that, because we got that February high of 110.33.
Right.
And then on the downside, you've got the January low of 104.85, right?
Right here. Right here.
Yes. So essentially, that sets your range. Now you have an 80% probability, if you close above that 110.30 level, that this is a dollar down year, euro up year, or vice versa. And you know, I'm looking at this. I've been playing around with a neckline that kind of comes in, you know, on the monthly chart around these sort of levels that we keep playing with, and we can't. We haven't really been able to break above yet decisively. We keep toying with it, and that goes back to the 2017 kind of lows.
Yes.
Right.
Okay.
And so, you know, can we do it? I don't know. And it worries me a bit, Dale, that, as you said, you know, even the cleaning lady is starting
But also
to talk about
big
this.
funds. Big funds are
Yeah, no.
increasing. They're
I get it.
increasing
The
their long
positioning,
positions.
right? The positioning is not encouraging. I mean, frankly, today the data was absolutely shit here in the US.
Right.
Right. And this thing should have gone more, but it just tells you people are long. I mean, you know, so I wouldn't, you know, I'd like it to see if we could get up and tie what I think is the down channel that we've been in basically since 2007, 8.
Okay.
The top of that down channel, which to me comes in, you know, depending on when we get there, somewhere in the 116.
Okay.
Right.
All right.
And then you flush out, or maybe we could just get it back up to, you know, 112, and then we flush out.
Can I lay out my narrative here?
Yeah, go ahead, mate.
All right.
You go ahead.
All right. So anyway, I think that there could be one more push up.
Yep.
I believe 112 will contain it if it happens. And then I think we've completed our first advance.
Okay.
And then we're going to enter a corrective mode that I think you'll be able to buy the euro around par.
Jesus, that far low. Wow.
For the big low.
Well, here's the thing. If that were to, well, no, it doesn't matter, I guess. No, because you'd have closed, as long as you get that monthly close above 110.33, then you can still do it. But that would be painful, Dale, because you're talking about. But it wouldn't be
unusual. It'd be
no, it wouldn't be unusual, sir.
Yeah,
it wouldn't be unusual.
Do you think risk off? Risk off.
I mean, that would have to be.
All right.
That would have to be. I would think. I mean, the only problem is here's the thing with the euro versus the rest of the dollar, and I think this is something that not always, you know, non-FX people realize. The euro is a funder.
Yes.
Right? We are funding long risk positions with short euros, right? And so in a risk off move, you can get a move up in the euro, even if the dollar broadly strengthens. So what will happen in that situation is something like euro yen would explode, or euro MEX would explode, or, you know, euro CAD would go up, or euro Aussie, right? So that people will cover their risk positions, and as they close those risk positions down, they have to buy back euros because that's how they funded it.
I see.
And I think
interesting.
That to me is a possibility. So my preference is to hold my risk positions in euros. But as I said, my big picture view, Dale, is that over the last decade, all the money in the world has come here.
Yes.
That we've had this truly self-reinforcing, virtuous cycle between the prices of US assets and the US economy, to the point that the cycle became truly reflexive in the sense that Soros uses that word, right? Self-reinforcing. So the purchase of the asset drives the fundamentals, and the fundamentals drive the asset even higher, right? And now you're at a point where all the money is here. It's heavily concentrated in the US equity market, which versus his peers has gone from the statistically impossible 5 standard deviations away from the rest of the world to now the statistically improbable 3 standard deviations above the rest of the world, which is only supposed to occur, 0.3% of the time. And I generally don't take 99.75% bets, 7% bets against me. And that money has come into the US in a reflexive way, looking for the returns, piggybacking a strong dollar, right? It's great as a foreigner to have currency strength working for you, in this case, the dollar, and outperforming US equities, right? I mean, there's the two for one, right?
Yeah.
That money is all here. It's come in, it has to come in on an FX hedged basis because it's funding our current account deficit. And now that metric is, and it looks very solid and it continues for a long time and the momentum is very strong. But the problem is, Dale, it's definitionally an unstable stable equilibrium in the sense that this relationship, which has occurred for the last decade, is dependent on the stability and the maintenance of 3 things. Number one is a very strong US economy, because if the economy goes into recession, which we certainly believe we are heading for a hard landing, okay?
What does a hard landing mean to you?
I mean, 6.5%, 7% unemployment.
That's hard.
In
a tight labor market, that would be a pretty big number.
And that's what our models are showing.
Okay.
And they haven't topped yet.
Does it mean a bear market in equities that the narrative will shift?
It doesn't, Dale. I mean, the equity market is the biggest, it's just a liquidity game. It's got nothing to do with fundamentals, right? I mean, look what happened during COVID. We were literally all going to die.
Yeah.
Right. And they printed $4.75 trillion worth of liquidity.
But, Julian, I have to push back because maybe about 6 months ago or maybe before that, you were talking about the whole economy, the financialization of it.
Right.
And for the Fed to accomplish its goals, it needed a lower S&P.
I think it still does. And I'm just struggling to see. Look, I still hold hope that we will go and test the lows at least, right? Okay. And the reason that I say that is because they are starting to drain liquidity, particularly in the second half of the year. They should, if we get a deal on the debt ceiling, and they start to reissue debt.
We're not going to get a deal right away. There's going to be kabuki theater, and
correct.
And let me ask you this: we could drag it out and not have a default, but still have a downgrade like happened before.
Yeah,
that's
I'm hearing some very unpleasant things as to what games that Biden may play, and they really worry me.
Let's just call it Washington.
Right, but he's contemplating something, I'm told, which Obama contemplated and rejected because of the dangers to the bond market.
He's contemplating having a default.
No, he's contemplating challenging the legal validity of the debt ceiling.
Oh, interesting. All right, where do CBDCs come in this Twilight Zone episode that we're living through? Europe's going to have one in October. I saw Lagarde said they will. They are moving. They are going forward with it.
Yeah, look. I mean, here's the thing. For US investors, it's getting harder and harder and harder to put money into the crypto space, right? This is kind of one of the things that we've always been a little bit concerned about. Is not the potential advances in crypto from a price perspective. Indeed, Raoul, when he called the recent low around 12,000, did an excellent job on that, and we agreed with him. It was a good time to buy. It's the ultimate ability for you to own them, right? I just don't think the man is going to let you own non-governmental crypto, right?
Okay.
I just don't think
they just let the experiment go on so that people would become comfortable with the whole concept of crypto.
Yeah, I mean, look, you get someone else to build your bloody infrastructure for you for free, right?
Yeah.
Right.
So that makes it, it's a hostage now.
Right.
How are they going to, Bitcoin proponents say there's no way it could be confiscated.
Look, mate, in the 20s, they confiscated your gold.
Yeah.
Right?
Yeah.
Now, let's fast forward 5 years. Let's say the US is in a pretty poor state. Pressure's increasing on the dollar. Bitcoin could be a lot higher, right? And they just decide that they really don't like this ability for you to kind of circumvent the system, right?
Right.
So then they, and I've been at conferences, where guys who were very, very smart, made enormous amounts of money, way, way more than I ever did in crypto, have said, well, they just can't find us, right? It's off the grid. That's the whole purpose. And I said, okay, fine. So let's imagine that, the NSA, of course, has no ability to find out what you've done, right, and track the records. And they find, one of the crypto twins, right? And they lock this guy up for whatever they want to call it, right, for 120 years because they take it to some Texas court, right? And they say, we're coming after you all, and you've got 90 days to come clean.
Turn them in. Yeah.
Right? Whose wife
Wow.
or partner is not going to say, shut the fuck up, pay the taxes, right, and hand it over? Because you're the father of my child, the husband of my child, right? It doesn't really matter.
Well,
right?
I mean, if you want to get to that, wasn't COVID really a test of how you could get the population to comply?
Sure. Look, I mean, today I thought we had something very profound, right? And I tweeted it out today. It's something that we've been talking about for a number of years. We said we thought we were going to a world, Dale, as soon as we started to see, we were writing about China and US breakdown sort of starting in 2019, 2018, okay? And we said, we're going to get to a point where the last 40 years, basically 30, 40 years, where we've seen sort of essentially unbridled corporate capitalism trump what I would call big boy politics, okay? Geopolitics, the concern of the state, where the state allowed essentially corporate actors to do what they wanted, right? For Elon Musk to go and open his factory in China, for US companies to export technology to China, to our enemy.
No handcuffs.
Right? No handcuffs, right?
Yeah.
And Yellen came out today, and we said that's ending, right? You're going to have to pick a side. And I truly believe this. I truly believe at some point Elon Musk is going to have to make a decision on which passport he owns. Is it a US one or a Chinese one? Because he's not going to be able to own both, right? Because in a pre-1989 Cold War world, Dale, you and I are old enough to remember this, right? If you'd have said to Ford in 1988, a year before the Berlin Wall collapsed, we want you to go and open a factory in the USSR, okay? And we want you to start transferring all your technology to the Russians. They'd have looked at you as if you had two heads. And yet now it's assumed to be the perceived right of every corporate CEO to just pour his technology to the enemy. That is gone. And Yellen came out today and said that they're prepared to accept economic costs as they seek to protect US national security interests. Right? This world is just changing extraordinarily rapidly, Dale, right?
The fork turning, Julian?
Absolutely. But it's the inevitability of how society works, right?
Yeah.
It's just the inevitability of how society works. I mean, we believe we're in a, we've been talking about these two Bank of England papers they've written about 800 years of bond market reversals, right? And they go through and look at what causes bond bear markets, or the end really of bond bull markets. And they're absolutely consistent, Dale. It's a war, which demands huge fiscal spending from government, right? Which stresses the bond market. Right. And then secondly, it's a pandemic, right? And we just had both, right? And we just sit here and we think, oh God, we're so different. The world is just so different from when it was. And then you go, really? You don't think technological innovation has happened in the past, right? I mean, I would argue that, the internal combustion engine was marginally more important than bloody cloud computing, right? But we just forget these things, and the world is not that different.
You know what? What else we're forgetting? We're very complacent about Ukraine, Julian.
Yes,
and you know what? Maybe that pullback in euro from wherever it peaks at the end of this first wave.
Maybe that's what it is.
Yeah, maybe you know, there's escalation. NATO countries are getting ready, and all of a sudden, the ocean between Europe and North America
looks like
good
a good moat. A very big moat.
Nothing kinetic happening here.
Yeah, I mean, one would hope so. One would hope not, but it's entirely possible, Dale, right? But the point is as people forget history, they forget that you can have dollar structural declines, right?
Yeah, right.
And not the end of the world, not the rise of some new reserve currency, although I do think we're increasingly in a multipolar world.
The end of a world we lived in, going through the Rubicon into a world that sounds very dystopian to me.
No, I think look, mate, you and I lived through the 70s, right? We had bad haircuts, flares.
I watch Apocalypse Now to relax and platoon.
but you
those were the good old days.
Yeah, but we lived through them, right?
Yeah,
I mean, the world wasn't. You didn't get on you didn't have the freedom to travel, right?
Yeah.
You didn't have actually the freedom to take money abroad like you do now, right? I mean, these are all these things that we could kind of go back to.
Yeah.
And so I think that's all as I look at stuff, Dale, I look at it through the lens of history. I look at it through the lens of cycles. And to me, we're going into recession here in the US. All the money is here. Look, don't get me wrong. Acceleration of events in Ukraine, that's fine. You know, that could throw a spanner in short term into this. But all the money is already here.
And they're leaving.
And it's leaving, sir. Right?
Okay.
It's leaving.
The outperformance of foreign stock markets over the
Correct.
US.
I mean, we wrote a piece, one of the first pieces we wrote at the start of this year was we said that we're breaking the trends of decades when it comes to the relative performance of US equities versus the rest of the world.
Yep.
Right? It's beginning to break down. It's beginning to break down.
I can't let you get away without, because I learned from you, Julian Brigden, that silver never bottoms until there's a bear market in the dollar.
Correct.
Which was spot on again. So with your view of the dollar, what do you do with metals here?
Well, look, you know, PA I'm long, but I'm, you know, and I'm long miners as well. But they look kind of stretched, right? Yeah. A lot of stuff looks kind of stretched. So you sit here and you go, you know,
buy breaks, right? Buy corrections.
Yeah, you should buy corrections, and I'm, you know, I want to get involved again, you know. But as I said, you know, today the euro should have exploded higher, right? Given the data.
Yeah.
And its price action is pretty muted, right? Which suggests to you that people are long. You know, and there's certainly a little long gold and silver. I mean, there's such tiny market scale that you can't really, you know, in the scheme of things, you can't really suggest too much. But I'm structurally looking to buy all of this. I think US equity outperformance is done.
Okay. There are other
relative. Yes, there are.
Tina left. She got back together with Ike Turner.
Yeah, exactly.
So
I mean, look,
she's not available. Tina's not available.
Right.
Anymore,
I mean, I think people forget how much the US equity market is just massively outperformed. I mean, one of our favorite trades that we have for our macro insider clients is we are long IBEX, so the Spanish equity market.
Oh, okay.
Short the NASDAQ.
Oh, okay. A pairs trade.
In a pairs trade. I mean, I'll give you a clue. In 2009, the ratio was 0.1. 0.1, Dale, right?
Yeah.
At the highs of the NASDAQ, it was 1.7.
Okay.
17-fold increase, right?
Right.
It is now 1.25.
Okay.
Right? So 12.5 fold increase.
Yeah.
You know, over the next 2 or 3 years, is this thing going back to 0.5? Yeah. I think so.
Okay. So that's also the other narrative. If you want to be long stocks, look outside the U.S.
Yeah, that's my mind. I mean, look, you know, I was on a call the other day and talking to people about this, and you know, the comment was, wow, that's depressing. And I was like, whoa, hold on. You're telling me, because I think that you could be buying, mining, metals, energy, emerging markets to some degree, selectively, Europe, and we're going to have a rotation of biblical proportion out of the US market, that this is the most depressing thing you've ever heard in your life, right? I'm telling you, there's an enormous amount of money to be made here. And it just tells you, Dale, that people are still fully wedded to the same shit that they've owned for the last decade, which has worked out brilliantly for them, right? Which is tech, consumer discretionary in the US, and healthcare. And haven't even begun
to semis. The semis,
right, and
they've already peaked.
Yeah,
the semis here.
And they haven't got their heads round yet.
Yeah.
This idea that this thing could change and there's some money-making opportunity. To them, it's still, oh my God, you're going to mean my Nvidia that's trading on a P of 120, which is above.
They're stuck in their paradigm.
Correct. Right? People haven't even started to get their heads around what's coming.
They need to remember what W.D. Gant said, Julian. If you don't learn how to change your mind, you won't have any change left. And
That's a great line, actually. I haven't heard that one before.
And also, keep an open mind. It will keep your account open.
Right. Yes.
Okay.
Yes.
So, I love talking to you, Julian. We can't let as much time fly by. I think that people could consider your research in their.
Thank you very much. Yes, there you go.
Okay.
Our whole team. I think we're up to 200 years of collective market wisdom, Dale, now.
Wow.
And these are people who've run big portfolios, trade it. We don't just run it for research. We try and definitively make people money.
And I see you have a big conference this fall.
We do.
Out in
we
Vail.
do. Yes, it's the most beautiful time of the year to be there. Late September. All the leaves will be stunning. I suggest you bring your partners with you because they will love it, and you will actually earn brownie points as you enjoy yourself and they enjoy themselves. They go to hiking or the spas or run around town or do something like that. It's beautiful. 75 degrees, 45 at night, sit by the fire. It's no humidity, lovely. And yeah, it's the 26th to the 29th of September.
Oh, okay. All the trees are changing and everything. So
correct.
Wow. All right. Well, we'll see what the dollar's doing this fall.
Yeah. Yeah. I mean, I'm going on a trip to South Africa at the end of the year, and I've already paid for the whole thing up front.
Okay. You're going to check out some South African mines, huh?
Yeah, I've actually got a wedding out there that I've got to go to. But my view on the dollar is, I think this thing's going down. So why would I take, a 10 to 15% swing against me, right?
Right. Okay. I think there's going to be a better short in the dollar, but that's what makes markets down the line. Up around 108 to 110 Dixie is what I'm looking for. We'll see.
We'll see, boss.
Yeah. And
the ZAR looks interesting. I was just looking at the ZAR, this 1850 level.
Yeah.
I think it's quite a good level to try and start shorting the dollar up around here. I mean, it's topped out since September, October of last year. It hasn't been able to get above that level, and now looks like it's beginning to break lower.
You know what? I'm going to let you execute now.
Thank you, boss.
And load up on it. And Julian, I'm a fan. Appreciate
Thank you,
your
Dale.
time.
Appreciate it. You too, sir.
Thank you for edifying us today. Appreciate it.
No worries. Thanks very much.
My trading warrior brother, Julian Brigden.